The markets are on fire. Big pop to end out the week. My name's Dez here at Grok Trade, and this is the weekend edition. Good through Sunday, February 9th, 2014. And on Friday, we ended the week very bullish. All major indices up over 1%, with the NASDAQ doing the best, up 1.7%. Not that much backing from financials though, only up 0.2%. VIX though dropping over 11%. We're around 15 now. If you take a look here at gold and silver, you'll see that we did make positive movements there. Furthermore, in commodities, you had crude oil up 2%. US dollar down 0.3% on Friday. Taking a look here at the markets, what I want to do here is do a little educational piece. Thank you, by the way, for the emails that have come in giving me kudos for the recent calls here. And I want to explain this to everybody, especially those who wonder if technical analysis actually works. Well, the quick version, the 35,000 foot version, is this. And what I can do in a 3 to 4 minute video is nothing compared to what I can do if I was your mentor helping you through this. But check this out. In a big uptrend, what does that mean? We have higher swing highs, higher swing lows, big uptrend. However, the uptrend has two trend lines converging onto each other. If you were to extend these two lines out to infinity, they would eventually cross. That gives us a rising wedge. A rising wedge with the bearish divergence here on a centered oscillator, MACD, is very bearish. Going back in time here, we had this choppiness. We hit a support level. We rallied higher, 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 and higher. Little bull pullback. With this bull pullback, we should have rallied higher, hit this line up here. We did not do that. We had a little bit of a rally here, but it was a little mini-me rally that didn't amount up to anything. However, we did drop and find support at that trend line yet again. We bounced back higher. Here's our chance to start going higher to hit that line. We failed to do it. We went sideways. This huge red candlestick put a lot of damage. That was a tell in the markets. That was a big red flag. The other red flags was the point that this rally could not hit resistance. When it bounced again, we could not hit resistance. So now we have a double top looking type formation. However, it's a triangle. This could get bullish and break out. It could just be building a base. If we move it forward, you'll see that we broke down. Now this is where you started hearing me scream saying this is the ice has been broken. Watch out below. This is trouble. I mean, this was when the alarm started going off here. Very next day, bam, to the downside. Next, here we get a little bit of a bounce. We drop again. We pop up. We drop. Here's our railroad. Red, white, red, white, red, right, white. But I've been saying this is a railroad which is more bearish and is bullish by nature, but because it is developing on a low, this is a low base formation, very bearish. Watch for more downside potential. Boom, again to the downside. Nasty. Things that drop fast tend to rally fast. Exponential moves to the downside. Things that drop fast want to bounce fast. Exponential moves to the downside tend to reverse quickly. We get a little pop here, and then we have this candlestick. This happened, if you remember, last couple of days I've been saying the markets have to rally and soon. And my video I was saying right here, it needs to be two big candlesticks, just a big pow, big pop to get back above this green line. The green line has to do with the weekly chart. It had to heal itself. And oops, went the wrong way. We get this one, and you can see buyers coming in. We drop, 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 drop. Buyers came in right here, rallied back higher. Because we rallied back higher, those were bulls or longs or people buying the market on that weakness. That is a very strong signal when you get a big long lower shadow at the bottom of a run or a drop. Very, very powerful. So I said we needed two big candlesticks, big chunky ones going northbound to heal itself, and there was a chance of that happening. Boom, candlestick number one, big white chunky one. We stop at a resistance area. This was support here, resistance here. Very typical for it to stop right at resistance. I said I needed another big candlestick the same size of this one, maybe a little smaller, almost word for word on my video. Going into Friday, boom, we got that. Another one about the same size, if not larger on Friday. Boom, to the upside. Hugely. That's where we're at right now. Clearing out all this resistance. This happened very nicely, and we called it in the markets. We've been calling the markets just darn near perfectly. And people wonder, how is it done? Well, I've been trading 16 years actively in the markets. That certainly helps. But it also, technical analysis, you have to master it. You have to understand how price action works, especially along with volume confirming it and the right indicators and oscillators supporting what you're seeing. It is a delicate art. However, you have to be a scientist to go about it and do it correctly. I'll tell you this. Going into the markets and trying to trade off technical analysis without being formally educated in it is like trying to fly a plane by reading a book, or just trying to do heart surgery on your dog because of a YouTube video you watched. I mean, it's just insane. So anyway, you have this big rally, this big pop. Now we're caught up inside the moving averages right here. The question is, can we get above these moving averages? We do have a 20-day and a 50-day crossover here. We need to rally heavily here. You'll see on the MACD oscillator, we have an increased tick on the histogram, which is very bullish, but we are still in negative territory down here. Now on the weekly chart, this is, feast your eyes on this. Earlier in the week, we had a big red nasty candlestick coming down here, and I said for the markets to heal itself. I know there's a ton of lines here, ignore them. Only look at this line right here, this blue line. And I went back and I said, this blue line goes back it goes back to November 2012, right here, December 2012. Support here at June 2013, and big support here, August 2013. I said, watch that, watch that, watch that. We came here, found support, which really confirms that support line, giving it respect. We broke down through it, huge candlestick, and I said we had to rally back for it to heal itself with a hammer, and it has to happen before the end of the week. Thursday and Friday, boom, boom, to the upside. Now we have a great hammer here. This is nothing but upside potential for the bulls. So this is looking very, very strong. However, if we do break down, if the bulls had their chance and the bears say no way, we're taking this lower, you're going to see a big nasty red candlestick right here in the face of this. So everybody long is going to start getting out at this moment. Thursday and Friday, a lot of long coverings for those who were short, giving a lot of movement to the upside here. A lot of bear traps taking place last couple of days here in the markets. I want to take a look here at the VIX. If you go here to the VIX, I'm going to pull up let's go back to the weekly chart and do this. The VIX is just an awesome chart. If you look here, we went higher on the VIX. If the VIX goes higher, that means the markets are dropping. The VIX is a fear indicator for all those that don't know this. We go higher and then drop. We go higher, drop. We go higher, drop. We go higher, drop. Now, watch this. This big red line is the 200-week moving average, 200-week moving average. If you don't have that on your weekly chart for the VIX, get it on there now, today, set it, because look how much respect it is given in the VIX. The VIX hits the 200, drops. It means the markets go bullish, bullish, bullish. We get up here, a lot of fear, we hit it, bullish, bullish, bullish in the markets. Bullish, bullish, bullish in the markets. We come above it, bullish, bullish, bullish in the markets. We touched it, bullish, bullish, bullish in the markets. We're just caught up in this. Woe to us for the week. If we close above the 200-day moving average, look for nothing but more upside potential here. You're hearing it here. So we have that. Take a quick look at gold on the weekly. If you look at it, it's the bear pullback at a resistance point. We could drop. We need to blast through this for the weekly chart. If we do not, we start to drop. Watch for a lot of downside potential here on gold. Silver is just a low base. We drop, low base. If we start to drop here, we're in a real dangerous area, gang. If we start to show a lot of weakness, watch out below for precious metals yet again. And Apple, let's go to a daily chart. Apple, if you remember, and I said when we had this candlestick, that's the gap down, run up, specialist behavior move. All those mentor students of mine absolutely understand what a gap down, run up move is. This is institutions. These are market makers, how to play with them and not against them. There is a tail. You jump in on that day and look for nothing but upside potential, and sure enough, boom, that's all we have. Now I'm saying watch for downside potential. We've had a nice run. Watch for a drop. You have a gap up. You have a gap up rundown here. This could be market makers getting out of this trade. So that was probably over. Facebook was up 3.5%. This is a big pop, high base, boom, to the upside. Google closes at 1177. I'm looking at some movement here after hours. And LinkedIn, big pop yesterday, and then we drop here today, 209. Yeah. And let's see, Twitter up 8.6% after a big, just like a 25% cut yesterday. Just a huge, I say yesterday, Thursday. So Friday we're starting to bounce back a little bit to fill some of this gap. Amazon, bear pullback with a hanging man. Look for downside potential. 361 right now. It's at 361. A shorting opportunity on Amazon. Netflix was up 5.4%, high base, boom, breakout. Look for upside potential on Netflix. Our big winner that we had on the our bull list, we've had a number of them, is Green Mountain Coffee, GMCR. This is, we do stock pick lists each weekend, and you can certainly I'll share that with you, how to get signed up. But big run. I mean, this thing was up nearly 30% for the week. Green Mountain. Oh, and disclaimer, I'm holding that position. I do have a position in Green Mountain Coffee. O'Reilly, big pop, up 11%, another big winner on our bull list. And on Friday, let's see, FNGN, big pop, up 7%. Camp, actually I own Camp also, it's up 5.6%. GMCR, where I showed you AON, big pop on this, almost 5% on Friday alone. So on our bear list, we had our big losers was LQDT, and for the week, even though Friday it had a nice little pop, but for the week it was down almost 10%. INVN is another one, a big drop for the week, down more than 8%. So if I look at Friday by itself, yeah, so that's it for there. Let me share with you, if you're having a hard time knowing what stocks to pick, we can help you out with that. Just go to the website, freeonlinetradingeducation.com, but go to the V newsletter, and we'll give you a code, the number 2 weeks, all caps. That'll give you 2 weeks free. Just try it out. All I ask is this: if you make enough money to buy the annual subscription in what we give you free, let us buy it for you. Just buy the annual subscription, and definitely do that. If you have a hard time knowing when to get in and get out of a trade, and that is problematic for you, and if you could only know when to get in and when to get out better, then all problems in the world would be solved. here's what you need to do. 201 trading courses. This is the real deal. You get a lot of education there. Make sure you do that. All right, there you have it. Take care. Safe trading. Thanks so much for being a part. And you're getting the very best technical analysis right here at Grok Trade.